There is a tax that nobody talks about. It doesn't appear on your W-2. The IRS doesn't collect it. But every single person in this video paid it in full. It's called the chaos tax. And it's what happens when greed, ignorance, and absolutely catastrophic timing collide in the same brokerage account. Today, we have 5 stories. A guy who forgot he had a brokerage account and lost $3,000 in 25 minutes. A man who waited 5 years to break even, only to get destroyed by inflation in the comments. A silver trader who turned a win into a bigger loss and then immediately tried to win it back. A 22-year-old who inherited $120,000 and didn't know what any of it meant. And, saving the best for last, an entire national currency that went so far to zero that the zero went even more zero. What unites all of them is not stupidity. It's something more universal. It's the deeply human experience of being confidently wrong about money. Welcome back. Trade 1. And honestly, this one is almost charming. This guy logged into his brokerage account for the first time in over a year. Not a week, not a month, over a year. And within 25 minutes, he had lost $3,000. Now let's just sit with that for a second. Most of us check our accounts obsessively, multiple times a day, at dinner, in the bathroom, during funerals. This man just didn't. For a year. The top comment puts it best. 500 upvotes. The community has spoken. You don't belong here if you're sleeping peacefully at night. So here's what happened. He logs in. Sees Fiserv. Does something to Fiserv. Loses $3,000 almost immediately, and then, instead of closing the laptop and going for a walk, he decides to bet on Carvana going red, like a roulette table. Red or black. Except the ball is his rent money. Now let me explain what a marker is for the uninitiated. A marker in gambling is essentially a line of credit from the casino. In trading terms, he's using margin, borrowed money, to bet on a direction. In a stock he just randomly picked, after losing $3,000. This is what we call a smooth brain move. But here's the twist, it worked. He titled the post, Gain. The Carvana bet paid off. He called it the best 25-minute investment of his life. And look, honestly, same. And then someone dropped the fidelity study. Dead investors outperform living ones, because dead investors don't check their accounts. They don't panic sell, they don't revenge trade, they just lie there. Doing nothing, and somehow that's the optimal strategy. The lesson from Trade 1. The market rewards the disengaged and punishes the curious. This man accidentally stumbled onto the correct strategy, panicked, blew it up, then accidentally stumbled onto the correct outcome anyway. He is a chaos agent, and we respect that. But that was the warm-up. Trade 2 is where the chaos tax starts to get philosophical. 5 years. That's how long this person was underwater on their portfolio. 5 years of watching red numbers. 5 years of averaging down and telling yourself it'll come back. 5 years of not talking about it at Thanksgiving. And then it happened. Green. Finally green. They posted the screenshot. Look at this. Actual green. After half a decade. I want you to feel this moment with them before we destroy it. And then the top comment arrived. What's your inflation-adjusted gains? With a picture. Just a picture. No words needed. Let me explain what inflation adjustment means in plain English. If you made 5% over 5 years but inflation was 3% a year, your actual purchasing power went down. You're technically green on paper, but your money buys less now than when you started. You ran on a treadmill for 5 years and ended up slightly behind where you were standing. And if you want the real gut punch, here's another commenter's story. Down $80,000 after 8 years of options trading. Then made $120,000 in one trade. Then lost most of that in a year. Now sitting at $15,000. Net loss over a decade. 65 grand. This is how we roll here, he says. Like it's a lifestyle choice. Because it is. That commenter's lifetime journey deserves its own chart. Down 80 grand. Then a single trade rockets him to a $40,000 gain. Then the slow bleed back down to a $65,000 net loss. 8 years. This is what the options trading lifecycle actually looks like for most people. Someone else said, good job, Moses. And you know what? That's actually perfect. Because Moses also wandered in the desert for 40 years before reaching the promised land. And when he got there, he wasn't allowed in. The chaos tax on Trade 2. 5 years of your life, emotional energy, and the time value of money, all to break even in nominal terms. The market didn't take your money. It just borrowed your time and returned it slightly damaged. Okay. Moment of silence over, because Trade 3 is where things get genuinely chaotic. Our first guy lost $3,000 in 25 minutes. Our second guy lost 5 years of his life. This guy managed to lose $18,000 and somehow made it worse in real time. Meet our SLV puts guy. Silver. He was trading silver options. And look, before we judge him, he had a $16,000 gain he had already won. The money was right there. He had a $16,000 gain. He did not take the $16,000 gain. He pushed his luck. And he turned that $16,000 gain into an $18,000 loss. That's a $34,000 swing. In 1 week, on silver. But wait, it gets better. Or worse. Depending on your perspective, he got flagged as a pattern day trader mid-position. which means he literally could not close his trade. The PDT rule locked him in. He was trapped. Quick educational aside. The pattern day trader rule says if you make 4 or more day trades in 5 business days in a margin account under $25,000, your broker flags you and restricts your trading. It's meant to protect people. In this case, it protected him from himself by preventing him from making more bad trades. Silver lining, I suppose. So what does our guy do after losing $18,000 and getting trapped by the PDT rule? He sells more puts. For redemption. Or revenge, he says. His words. Revenge. Against the market. Against silver. Against the concept of money itself. And then he edits the post. Quote, I'm regarded. PCE data is coming out tomorrow and it's going to be horrible. Therefore, SLV is going to tank. Because bad inflation means rate hikes means strong USD means bad for precious metals. The self-awareness arrives. Too late. But it arrives. The comment that really lands. You are not supposed to play Russian roulette with an automatic pistol. That is the most accurate description of revenge trading I have ever heard in my life. The chaos tax on trade 3. $16,000 in gains plus $18,000 in new losses, plus the PDT trap, plus the revenge puts. The market didn't just take his money. It made him hand it over twice and sign a receipt. Okay, deep breath. Because remember our first guy who only lost $3,000? Those were simpler times. We're about to meet someone who didn't lose money through bad trades. He almost lost it through sheer, beautiful 22-year-old cluelessness. A 22-year-old just got access to a joint brokerage account his grandmother set up when he was 12. He's been sitting on it for a decade. It's now worth $120,000, and he has absolutely no idea what to do with it. He says his grandmother had the intention of teaching him investing when he was young. He found it incredibly dull. She gave up. Which is fair. I also find investing incredibly dull, and I've lost so much money doing it. Here's the detail that stops everyone cold. Almost half of the portfolio is in Tesla. Grandma went full degenerate. Grandma was a WSB member before WSB existed. Grandma was diamond-handing Tesla before diamond hands were a thing. And then the top comment. Nearly 2,000 upvotes. Grandma gambled on Tesla. You should cherish that woman more than you know. That is the greatest sentence ever written about a dead grandmother on a financial subreddit. I'm putting it in the Hall of Fame. The community did what communities do. 1,100 upvotes for sell everything and put it in a broad index ETF. Which is genuinely correct advice. Boring, correct advice. An index ETF is basically a basket of stocks that tracks the whole market. You buy one share and you own a tiny piece of hundreds of companies. The SP 500 has returned roughly 10% a year historically. It's the most boring investment in the world. It also beats almost every active trader over a long enough time horizon. The dead investors would approve. But my personal favorite comment, 477 upvotes. Sell everything, buy a new Dodge Charger, and a bunch of cocaine. This is also a form of financial planning. Short-term liquidity maximization, questionable asset allocation, high volatility. The chaos tax on trade 4 is subtle but real. The kid didn't lose anything. Yet. But inheriting money you don't understand is its own kind of danger. The chaos isn't in what happened. It's in what could happen next. If he listens to the Dodge Charger guy. If you're watching this and you just inherited a large sum of money and you're thinking about making any moves in the next 30 days, no. Stop. Close the app. Talk to a fee-only financial advisor. Not your uncle. Not Reddit. A licensed professional. This has been a public service announcement. Okay. We have been building to this. Trade 5. This is not a brokerage account. This is not one person's bad week. This is an entire country's currency. And it is gone. The Iranian Rial. As of this post hitting the front page of WallStreetBets with 26,000 upvotes, it had completely collapsed. Not declined, not corrected, collapsed. This is the final boss of the chaos tax. Look at this chart. Look at it. This is the Rial's value over time. There's a line and then there's basically nothing. A currency so destroyed that one commenter summarized the entire macroeconomic situation in 7 words. Yo, the zero went even more zero. Let me give you a quick explainer on currency collapse because this is actually important and genuinely horrifying. Hyperinflation happens when a government prints so much money or loses so much credibility that the currency becomes functionally worthless. Zimbabwe did it. Venezuela did it. Weimar Germany did it. You wake up and your life savings literally cannot buy a loaf of bread. And now here's WSB's response to that human tragedy. 7,000 upvotes. Yo, the zero went even more zero. That's it. That's the analysis. That's the financial commentary. Then there's the 4,000 upvote comment asking, completely sincerely, how realistic it would be to move to Iran and start a hotel chain. To be fair, the exchange rate would be absolutely spectacular. Your dollar would go very far. The other logistics might present some challenges. Here's the actual comment. 4,000 upvotes. The man is serious. He has a business plan. He has vision. He has absolutely no concept of geopolitical risk. 2,300 upvotes for the person who announced they're vacationing there next week to take advantage of the exchange rate. Probably going to take a cruise over. A cruise to Iran. This is the WSB entrepreneurial spirit applied to geopolitics. Absolutely unhinged. Respect. 8,000 upvotes for the most important question. Does this mean I'm going to have to endure 30 years of get in on the ground floor with Iranian Rial scams now? And yes, you are. Your email inbox will never recover. But wait, here's the comment that made 8,000 people lose their minds. Does this mean I'm going to have to endure 30 years of get in on the ground floor with Iranian Rial scams now? The answer is yes. Absolutely yes. And then there's the comment that says, and I quote, "It's going to go back up once you short it." This is the most WSB sentence ever constructed. The idea that your personal short position would cause a collapsed national currency to reverse. The main character syndrome is immaculate. The chaos tax on Trade 5 is paid not by one person, not by one trader, but by an entire population who woke up one day and found out that the money they had saved, the money they worked for, the money they kept under their mattress, was now functionally worthless. That's the real story under the memes. It's worth sitting with that for a second. But the WSB guy is still booking that cruise, so at least someone's winning. So let's add it all up. What is the chaos tax? It's $3,000 gone in 25 minutes because you forgot you had a brokerage account. It's 5 years of your life to break even while inflation quietly ate your lunch. It's a $34,000 swing on silver options and a pattern day trader flag that stopped you from making it worse. It's a $120,000 inheritance from a grandmother who quietly became a Tesla maximalist. And it's an entire national currency that went so far to zero. The zero went even more zero. The common thread in every single one of these stories is not that these people were stupid. It's that they were human, emotional, impatient, overconfident, underinformed, and in the wrong place at the wrong time with the wrong amount of money. We've all been there. Some of us are there right now. The only way to avoid the chaos tax is to be a dead investor. And even then, inflation gets you. See you next time.